Welcome to the deep dive. Today, we're jumping into something really interesting, how the financial markets, which often seem so complex, are actually becoming, well, easier to get into, even if you're starting from scratch.
Yeah, it's a big topic.
It really is. And if you've maybe thought about the markets but felt, put off by all the jargon or how complicated it seems, this deep dive is definitely for you.
Uh-huh.
Our sources today are highlighting these smarter tools, basically tech that's making market intelligence more available to everyone.
Democratizing it, essentially.
Exactly. So our mission here is to figure out how these new tools are helping beginners, well, get their footing and maybe even succeed in the markets.
It's quite a change from how things used to be.
For sure. Like Sarah Jenkins put it, the playing field is becoming more level every day. We're seeing everyday investors achieving results that would have seemed impossible just a few short years ago. Let's unpack that.
Okay, well, it really is fascinating when you look at the contrast,
Yeah.
the old way versus now.
Right.
Traditionally, getting into the markets, it felt like, trying to solve a Rubik's Cube blindfolded while everyone else had the instructions.
Yeah, that sounds about right.
The learning curve was just incredibly steep. Getting reliable data, that was expensive, hard to find. And the tools, the really sophisticated ones the pros used, forget about it for the average person.
It really was like a closed shop, wasn't it? Like you needed a Wall Street pass just to look around.
Totally. But
Yeah.
now things are really shifting. Like you said, the sources talk about this democratization of market intelligence, tools and insights that used to be, locked away in big financial institutions. Now anyone with an internet connection can potentially access them. It's a pretty big deal.
It feels like a radical change. So what's driving this? These intelligent indicator tools seem key.
Absolutely. They're a huge part of it. Think of them as software that takes mountains of market data, stock prices, volume, economic stuff, and sort of distills it
Distills it how?
into clear, actionable signals. It's like having an expert guide look at a super complex map and just point, okay, maybe go this way. They often use pattern recognition, algorithms finding trends humans might miss.
Okay, so these smart indicators, how do they actually help a beginner get past those old roadblocks?
Well, first off, they simplify things a lot. Instead of staring at, confusing charts and numbers flying by, these algorithms do the heavy lifting.
Crunching the numbers.
Right. And they present it in a much easier way.
Yeah.
Often just simple buy or sell signals.
Makes sense. Less intimidating.
Definitely. Second, it's real-time analysis.
Yeah.
You're not working with old information. You get immediate feedback on what the market's doing now. That helps make timely decisions.
Okay, yeah, that's critical, like having a live traffic update for the market instead of yesterday's map. What else?
A lot of them also have educational bits built in. They don't just say buy here. They often explain why.
Ah, so you learn as you go.
Exactly. You start to understand the underlying dynamics. Like Marcus Chen mentioned in one source, what they teach you. I'm learning why these patterns matter and building my own understanding. It's not just blind following.
That's a really good point. Learning by doing, but with a safety net.
Kind of. And finally, they can really help with emotions. Trading can be emotional, right? Fear, greed.
Oh, yeah, big time. Especially for newcomers.
So having objective, data-driven signals can help you avoid those impulsive decisions. It provides a bit of discipline.
Okay, that emotional aspect is huge. Now, the sources pointed to VIP indicators as a prime example, especially for beginners. What's special about it?
Well, according to what we read, VIP indicator seems to really capture this user-friendly approach. One feature they highlight is multi-time frame analysis.
Multi-time frame, meaning?
It just means the tool looks at data over different periods like the last hour, the day, the week, to see if the signals match up.
Okay, so it checks for consistency.
Yeah, exactly. It gives stronger confirmation for a potential trade. Reduces the chance of jumping on a false signal, which is, easy to do when you're starting out.
Makes sense. What else?
It also apparently combines info from several different technical indicators, those mathematical things traders use, into one simple buy or sell recommendation.
So instead of trying to juggle 5 different signals yourself,
Right, it gives you a single consolidated assessment, much clearer.
like having a team brief you with one conclusion.
Okay.
And I saw something about risk management tools being built in. Why is that so important?
Oh, it's absolutely crucial, especially when you're new. VIP Indicators reportedly has features to help with position sizing, how much money to put on one trade.
Right, not betting the farm.
Exactly. And setting stop-loss orders. Those automatically close a trade if it goes against you too much, limiting your potential losses.
Essential stuff.
Totally. It helps build good habits from day one. And apparently, the platform uses a kind of progressive learning curve.
Meaning it doesn't throw everything at you at once.
Yeah, it unlocks more advanced features as you get more comfortable.
Uh-huh.
So you're not overwhelmed initially, like learning to drive, right? You master the basics first.
That sounds smart. Gradual exposure. The sources mentioned Michael Torres, who apparently boosted his success rate significantly using it, from 30% to over 60%.
Yeah, that's what was reported. It's a pretty striking example of how these tools might help someone get a better handle on things.
Definitely highlights the potential.
And it wasn't just him. The sources mentioned others, too. Emma Lawson, a retail manager, reportedly turned $1,000 into over $7,500 in about 6 months.
Wow.
And David Park, a student, averaging apparently 12% monthly returns using alerts. That's a huge time commitment.
Okay, those are impressive numbers. And it's not just individuals finding success. Even professionals are noticing, like that retirement planner, Jennifer Oakes.
Right, she's apparently recommending tools like these to her clients. And she's observing that they develop market intuition, that feel for the market, much faster.
So it genuinely accelerates the learning process.
It seems like it. Dr. Amanda Fisher had a great quote. They teach you how to fish, but they do it while also feeding you in the meantime.
Huh. I like that. Practical help now, but also building skills for later.
Precisely. It's guided experience.
Mm.
It helps close that knowledge gap way faster than just reading books or, trying things randomly.
And the outcomes for these new traders? Better risk understanding, discipline?
Yeah, recognizing patterns, building actual confidence based on hopefully some consistent results, not just luck.
So what's next? Where does this tech go from here?
Well, Jason Mrinza, who's apparently big in fintech, suggests we'll see even smarter tools. Big machine learning.
Personalization.
Yeah, potentially tools that adapt to your trading style, your risk tolerance, maybe even your habits. They might not just say market looks bullish, but based on your profile, you might consider this.
That's pretty futuristic. A truly adaptive guide. Okay, so for anyone listening now thinking, maybe I should look into this, any advice from the sources on getting started? Elena Vega had some tips.
Yes, she did. First, she stresses that education is still key. These tools help, but you need a foundation.
Makes sense. Don't just rely on the tool blindly.
Right. Choose indicators that actually explain why they're giving a signal, so you're learning. Also, huge emphasis on paper trading first.
Practice with fake money.
Definitely. Before risking real capital.
Hmm.
And prioritize risk management above all else. Understand position sizing, use stop losses, non-negotiable.
Good habits from the start.
And finally, she suggests maybe joining user communities online. Share experiences, learn from others.
All very solid practical advice. Okay, so wrapping this up, the big takeaway feels pretty clear. The financial markets really are opening up.
Yeah, they're becoming much more accessible for beginners, largely thanks to these smarter tools, democratizing information, and speeding up that learning curve.
It's a definite shift, isn't it, from this exclusive professional domain to something where, well, determined learners with the right tech actually have a shot.
A real opportunity to succeed, yes.
Well,
it's less about impenetrable walls now.
as Rebecca Winters put it, beginners can win while becoming genuinely skilled traders who understand the markets. That's quite empowering.
It is.
So maybe a final thought for you, the listener. If these kinds of smarter tools can make finance more accessible, think about other complex fields. How might similar tech change things there? What new opportunities could that create for people wanting to learn? Definitely something to chew on. Thanks for joining us on the Deep Dive.